Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 12th of April 2019 and we're discussing the recently released World Silver Survey 2019 produced for the Silver Institute by the GFMS team at Refinitiv. Before we go into the report in detail, there are some notable headline points to cover. 1. Physical demand increased 4% in 2018, propelled by a modest rise in jewellery and silverware fabrication, and a jump in coin and bar demand. Indeed, investment in silver bars and coins grew by an impressive 20% last year, driven by an exceptionally strong demand sentiment in India. 2. Industrial fabrication lost 1% last year, which slightly reduced its market share from 59% to 56%. Solar panel demand actually fell slightly for the first time in 3 years, mainly the result of excess inventories to be cleared, as well as thrifting, though this was partially offset by an increase in electronics and brazing alloys and solder sectors. And 3. For the third consecutive year, silver mine output fell, declining by 2% last year, driven primarily by the lead and zinc sectors. Scrap also declined some 1.6%, primarily because of the near 8% fall in the silver price, which combined resulted in, quote, pushing total silver supply for 2018 down by 3%, unquote. The result of the above places the physical market in a deficit of 29.2 million ounces, or 908 tonnes, which is approximately 3% of annual demand. So, looking at the chart, we can see that total supply results in 1,004.3 million ounces, or if you like, a billion ounces, just over, against total physical demand of 1,033 million ounces, providing a physical deficit of 29.2 million ounces. Taking into account ETP inventory build and exchange inventory build, the deficit rises to 80.1 million ounces. Now, it has to be mentioned here that such a small deficit should not engender particular excitement, as it falls well within the margin of error when organisations attempt to calculate these figures. However, it does provide an interesting trend. For subscribers generally, the important elements to note are that coin and bar demand are up nearly 31 million ounces, over 20%, though the figures are still lower than each of the years between 2013 to 2016. And the fall in industrial fabrication of 7.2 million ounces, which supports our consistent analysis and commentary that industrial production levels would be down, we expect these figures to fall further in 2019, and is an additional sign in the slowdown of economic growth, and therefore the falling demand for silver for industrial purposes. The LBMA silver price averaged $15.71 an ounce in 2018, down by 7.8% year on year. Trading took place within a $3.55 range, reaching a high of $17.52 and a low of $13.97. To put this in perspective, silver is currently standing at $15.06, having opened the year at $15.49. Silver analyst Johann Weber told Reuters that, quote, driving the increase was India, where gold prices spurred many consumers and investors to switch to cheaper metal silver. India's consumption of silver jewellery jumped 16% to 76.5 million ounces in 2018, while purchases of silver investment bars in India surged by 160%. To 69.4 million ounces, lifting global bar and coin investment by 20% to the aforementioned 181.2 million ounces. He predicts that industrial demand is likely to fall this year by about 1%, but would rise again in 2020 and 2021 as production of solar panels pick up and US coin sales expand. He said supply would rise by about 1% in 2019 before falling again in the early 2020s. Weber also says that he expects rising economic and political turbulence, along with a likely weakening of the dollar, to push prices higher this year, with silver averaging $16.75 in 2019 and $17.50 in 2020. We generally agree, though we suspect that the US dollar may have some more strength left for a while yet. That said, we foresee little reason for any major surge or collapse in the price of silver during 2019 and accept that this will present stackers with a further opportunity to acquire more silver during dips and at leisure. We shall be covering this report in greater detail within the Inner Sanctum tomorrow, where we indicate some telltale signs that all is not quite as it seems. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.